Okay, so today we're diving deep into Nava Ltd. You know, it's fascinating. They used to be called Nava Ventures. But what really struck me going through all these documents you sent is just how much they do.
Yeah, it's quite the mix, isn't it?
It is ferroalloys, power. I mean, they're generating it, they're trading it, they're digging for coal, even running entire power plants. And not just in India, we're talking Singapore, Zambia,
Well,
global reach.
you've definitely given us a lot to unpack here. Annual reports, we've got FY 2020-21, FY 2023-24. There's an earnings call transcript from Q3 FY 23, and a bunch of other stuff too. I guess our mission is to really sift through it all and see what's important.
Right. I think the big things we want to focus on are how have they been doing lately? You know, performance-wise, have they made any major changes in their strategy? And looking ahead, what does the future hold for Nava Ltd? Big questions. But for everyone listening, we want to break it down in a way that makes sense. No need to drown in technical jargon. We're aiming for those light bulb moments, like, oh, that's how it all fits together.
Exactly. Clarity is key.
Absolutely. So should we start with their ferroalloys business? It seems like that's one of their core operations.
Yeah, good place to start. Nava is a big player in making and exporting manganese and chromium ferroalloys, which, for anyone who's not familiar, those are essential ingredients in making steel. So their success in this area, it's really tied to how the whole steel industry is doing, both globally and in India.
It looks like their Palancha plant, that's their main production site, has been doing pretty well, over 80% capacity utilization, except for, of course, when those lockdowns happen. That's pretty good for this industry, right?
Oh yeah, definitely above average. When we talk about capacity utilization, we're basically saying out of all the stuff they could produce, how much are they actually making? So being over 80% means they're running a pretty tight ship.
Efficient, yeah. And there's something else here that gives them a real edge, I think, in terms of power. They've got their own power generation, right?
Captive power generation, yes. And that's huge because power is a big expense when you're making ferroalloys. So having their own supply helps protect them from all those ups and downs in energy prices that you see out there. Gives them a real cost advantage over anyone who has to buy their power from someone else.
Makes sense. Now, zooming out to the market itself, global demand for ferroalloys is essentially following the trends in steel production, right? If more steel is being made, they need more ferroalloys. Simple as that. But in India specifically, there's a shift happening. It seems like steel producers are increasingly opting for silicomanganese instead of the traditional ferromanganese.
And here's where Nava's strategy gets really interesting. They saw this trend and they adapted. They actually converted one of their ferrochrome plants to start producing silicomanganese instead, aiming for around 50,000 tons a year. So they're directly responding to what the market wants.
Smart move. And speaking of smart moves, it looks like they've secured exploration rights for manganese ore in Ivory Coast. And this is where it gets interesting because this could be a step toward what's called backward integration.
Yes, basically controlling more of the supply chain. Instead of just buying manganese ore from someone else, they could potentially be mining their own. It's
Yeah.
like, imagine a bakery that decides to buy a wheat farm. Gives them more control, could potentially save them money in the long run.
Exactly. Now, this is still early stages, right? It's exploration, not full-blown mining yet. But it shows they're thinking ahead. Okay, enough about ferroalloys for now. Let's switch gears and look at their energy business, which seems to be another big chunk of their pie.
Yeah, and their energy division has been a real bright spot, particularly in FY24. They've seen some strong profitability there, and they're crediting a lot of that to improvements they've made in how they run things and by bringing down costs.
One thing that jumps out is the turnaround they've had at their Nava Energy India Limited, or NBAL for short. That 150 mW power plant they operate has been doing well, working with both bilateral contracts, which are direct agreements with specific buyers, and selling power on the open market through power exchange tariffs. They've also managed to improve coal availability and bring transportation costs down, which has helped them to actually pay down some of their debt. That's a great sign.
Really positive developments there.
Yeah.
But it's a bit of a mixed bag when you look at their other power plant, the 114 mil W1 in Telangana. Seems like they've been struggling with high coal costs there.
But they're not just sitting back. It sounds like they're planning a pretty major overhaul of that plant. They want to create a 50 milliW captive unit, which would essentially provide power for their own needs, and then a 64 milliW independent power producer, an IPK, that would be looking at alternative sources of coal, hopefully something more cost effective. Shows they're willing to adapt and try new things to keep the lights on, so to speak.
Definitely. And it highlights the constant challenge for energy companies, that balancing act of managing fuel costs, which are always changing. Now, we can't talk about energy without mentioning their operations in Zambia through Mamba Collieries Limited, MCL. This seems to be a really big piece of their energy portfolio, and it's performing incredibly well.
It is. Their power plant there has been running at 92% availability in FY23 and even hit a whopping 99.5% in one quarter. That's amazing. They're selling a lot of that power to the local Zambian utility company, ZESCO, but they're also tapping into the Southern African Power Pool, SAPP. That lets them sell electricity to a wider regional market, which is pretty savvy.
And it gets even more interesting when you look at the price difference. In Q3 of FY23, they were getting an average of 14 cents per unit from SAPP, but only a little over $0.10 per unit from Zesco.
Yeah.
It shows the benefit of having different customers and being able to access those regional markets where prices might be better.
All right, time to crunch some numbers. Looking at the financials, it looks like their shareholders' fund saw an increase in FY21. They say that's mainly because they've been reinvesting their profits. So instead of just pocketing the money, they're putting it back into the company to make it stronger.
And they also managed to reduce their net debt in FY21, which improved their net debt to equity ratio. That's a good sign. It basically means they're relying less on borrowed money, which makes them less risky from a financial perspective.
And their profitability has been pretty impressive too. Their standalone net profit jumped by over 20% in FY21, which they say was largely driven by their silicomanganese exports doing well. And both their consolidated EBITDA, that's earnings before interest, taxes, depreciation, and amortization, and their PEAT, profit after tax, were looking healthy in that period.
Yeah, those are key indicators that tell us the core business is making money. And then you look at FY24, their revenue from operations was over 381,811.66 lakhs. Total comprehensive income was a massive 130,000.89 lakhs. Those are some serious numbers.
Definitely not a small-time operation. Now, there's one big financial issue that stands out, and it involves Zesco again. Apparently, MCL, their operation in Zambia, was owed a huge amount of money by Zesco, something like 481,958.78 lakhs. That was as of late 2022. They did reach a settlement agreement, which is good, but
But when you look at the earnings call from Q3 FY23, it's a little concerning. Even though they have that agreement, they'd only received an upfront payment of $10 million out of a total of $518 million was agreed upon. So whether they actually get all that money back is a big question mark. It's going to be crucial for MCL's financial health, and obviously that impacts Nava overall.
something to watch closely. Okay, let's talk about something a bit different now. Nava's been making some moves to diversify, get into some totally new areas.
Yeah, this is really interesting. They've made a pretty significant investment in agribusiness. Specifically, they're setting up a large-scale avocado plantation in Zambia using land that's owned by their Kawambwa Sugar Limited subsidiary. They're aiming to be one of the biggest avocado producers in the world. As of March 2024, they'd already planted over 75,000 avocado trees, and they've got even more on order. Seems like they're betting big on the global appetite for avocados growing even more.
It's a bold move going from heavy industry to avocados, but it's not the only new thing they're trying. They're also expanding into healthcare services, specifically in Southeast Asia, Singapore, and Malaysia. And what's interesting is they're calling this an asset-light approach, meaning they're not going out and building tons of hospitals and clinics.
Right. So it raises the question, what's the grand plan here? Why are they branching out into these seemingly random sectors? It tells me they're looking beyond their traditional businesses for future growth. Maybe they're also trying to balance out some of the risks that come with being so heavily invested in industries like ferroalloys and energy, which can be cyclical, meaning they go up and down with economic conditions.
Makes sense. Now, let's talk about how they're running the company, their corporate governance and all that. It looks like they have a lot of active committees at the board level. Audit committee, nomination and remuneration committee, CSR committee, stakeholder relationship committee, risk management, investments. They've got it all covered.
Yeah, and they emphasize that they do performance evaluations for their independent directors. That's a good sign. Suggests they're serious about good governance practices. And the fact that they reappointed Mr. K. Duka Prasad as an independent director means they must value his experience and input.
In terms of social responsibility, it looks like their focus is on education, healthcare, and infrastructure in the communities where they operate. That mobile science lab, the Vijnana Daini that they're running, that's pretty cool. Taking science education directly to schools, that's got to have an impact. They've also been doing health campaigns in Odisha and invested in better washroom facilities in schools. All good stuff.
They're also taking employee well-being seriously, which is crucial. They have a zero-tolerance policy towards sexual harassment and an internal complaints committee to deal with those issues. And it's worth noting their focus on energy efficiency in both their power and ferroalloy divisions shows they're aware of their environmental impact and looking for ways to reduce it, which can also save them money.
All right, let's wrap up by looking at things from the perspective of someone who owns shares in Nava Ltd. For starters, there's the whole stock split thing. Shareholders approve that, which is basically meant to make the shares more affordable for smaller investors. They also had a request for a bonus issue of shares, which they acknowledged but said they'd only consider when necessary.
And they have a good track record of paying dividends. Over the past 10 years, as of February 2023, they'd paid out a total of INR 22 per share. So they're consistently returning value to their shareholders. And if the final dividend for FY 2023-24 gets approved at their upcoming annual general meeting, it sounds like it'll be paid out pretty quickly.
To make things easier for shareholders, they have remote e-voting so you don't have to physically attend meetings to have your say. And they're also transferring unclaimed dividends and shares to the Investor Education and Protection Fund, which is the responsible thing to do.
Now, looking ahead, there are definitely some challenges and potential risks to consider. The company acknowledges the importance of responsible sourcing for all the minerals and materials they use. There's growing pressure on companies to make sure their supply chains are ethical and sustainable.
Right. And then there's the whole issue of environmental regulations, which are only getting stricter, especially in the ferroalloy sector. Nava's going to have to adapt to stay compliant and competitive.
Absolutely. And they've got a few legal battles going on, mainly related to customs duty, excise duty, and other demands from regulatory bodies. Though management seems pretty confident they'll come out on top.
We'll have to see how that plays out. Lastly, a quick word on leadership. It looks like Mr. Ashwin Davini has been reappointed as CEO, which isn't a huge surprise. But what is interesting is that from May 29th, 2024, he won't be getting any direct salary from Nava Ltd itself. His compensation will come from Nava Singapore PLTD instead.
Intriguing. And the reports also go into detail about how much the directors are paid compared to the average employee, which is a good level of transparency when it comes to executive compensation.
So where does all this leave us? Well, Nava Ltd is a company with a strong foundation in ferroalloys and power generation. They've got a significant international presence, especially in Zambia, and they're clearly making a push to diversify into new fields like agribusiness with those avocados and healthcare services in Southeast Asia.
Their recent financial performance is encouraging. But there are definitely some hurdles ahead, like collecting that money from Zesco and navigating the ever-changing regulatory landscape.
For me, the big question is, what's the long-term vision here? What are they trying to build with all these different pieces?
That's the real food for thought, isn't it?
Yeah.
As those avocado trees grow and those healthcare ventures develop, what will the overall picture look like? Will these new areas create synergies with their existing businesses, or will they introduce new risks? I think it's going to be fascinating to watch how Nava Ltd evolves and how they manage this transition from a traditional industrial company into something much more diverse. It's a story that's still being written.
Definitely one to keep an eye on.
Absolutely.